Today, Do Kwon is reportedly set to be released from jail in Montenegro. Bankrupt crypto lender BlockFi gets the green light to return nearly $300 million to wallet customers. And PitchBook crypto analyst Robert Lay breaks down the research firm's new report out today on VC investments in the space. Welcome to CNBC's Crypto World. I'm Jordan Smith. Crypto prices are in the red to close out the week, with Bitcoin continuing its decline, trading around $26,000. Ether dipped below $1,800, and the Matic token slipped to 84 cents. Bitcoin and Ether are both down for the week, even as new economic data out yesterday showed price hikes cooled last month, with annual inflation reaching its lowest level since April of 2021. All right, let's talk about the top stories. Terraform Labs founder Do Kwon is set to be released from jail in Montenegro on supervised bail. Citing a court notice from today, CoinDesk reports that his lawyer's proposal to pay 400,000 euros or $435,000 to be released from custody was accepted as his trial on document forgery charges continues. Under the conditions of his bail, Do Kwon will reportedly be under surveillance and prohibited from leaving his apartment. Kwon and a Terra executive were arrested in Montenegro for allegedly trying to travel with forged documents. Next, Binance US is exploring ways to cut founder Changpeng Zhao's majority stake. That's according to the information, which cited two people familiar with the situation. CZ has been reportedly trying to sell at least some of his stake since last summer. The information reported that in recent weeks, leaders with Binance US have been discussing how the move could improve the company's standing with regulators. We reached out to Binance US today, but didn't hear back right away. Back in March, the CFTC sued Changpeng Zhao and his international crypto company for allegedly violating compliance rules to attract US users. At the time, a Binance spokesperson called the complaint unexpected and disappointing, adding that the firm has made significant investments over the past 2 years to ensure it doesn't have US users active on the international platform. Last, bankrupt crypto lender BlockFi got court permission yesterday to return nearly $300 million to wallet customers. Those customers include those with non-interest-bearing accounts and excludes the roughly 48,000 who tried to move funds into those accounts during BlockFi's shutdown on November 10th. Those customers received email confirmation that the transfers were complete, but BlockFi never performed the back-end work. While lawyers for those customers argued the BlockFi should honor those transfers and return funds to those people as well, the bankruptcy judge ruled that the firm's terms of service allowed it to block transfer requests as part of its broader shutdown. The judge also ruled that customers owned their deposits in BlockFi's wallet program, which kept deposits separate from BlockFi's other funds. But customers who had interest-bearing accounts, well, they didn't own their deposits, which were turned over to BlockFi for use in its broader lending business. All right, on to our main story. PitchBook's Q1 crypto report was released today. It breaks down venture capital investments in the space and outlines emerging opportunities. The firm's crypto analyst Robert Lay sat down with Crypto World's Talia Kaplan to discuss the research.
Your new crypto quarterly report just came out, and in February, when we spoke about the Q4 report, you forecasted that VC funding will continue to decline in the first half of this year, and lo and behold, after reviewing your new report, your forecast is coming to fruition. Let's break down the numbers. The report reveals that crypto companies raised $2.6 billion globally across 353 investment rounds, marking the lowest capital investment and deal completion since the last quarter of 2020. Now, that $2.6 billion figure represents a drop of 11% compared to the quarter before in terms of deal value, and 78% compared to the year before. So why do you think VC funding dropped further compared to Q4 of last year, especially with the FTX collapse in the mix?
Yeah, so you just said it. FTX is a big part of why capital has been declining in terms of investments going into this space. We saw this decline really started from Q1 of last year, and it's just been a quarterly decline, quarter over quarter. And, I think what investors are doing right now in this time is they're resetting. Got to reset, and they're trying to look at what are the risk areas of crypto and what are the opportunity areas. So, and this is not specific to just crypto, the broader venture market in general. Investors are looking to reset in terms of valuations, in terms of what the opportunities are, and then they're not in a rush, FOMO, to try to rush into making any investments right now. So that's why you're seeing that decline. I don't think this decline will continue for the rest of the year. And we spoke about this earlier, that we think later in the year it's going to go back up once investors get comfortable where the opportunity areas are and what teams are building that can turn to real world products and businesses. And that's where capital will start coming back in. But in this moment right now, investors are in a wait and see approach to see and talk to teams, take their time and not rush into making investments. That's why you're seeing this lull in the amount of capital going into the crypto space.
When we spoke about ChatGPT's impact on crypto a few weeks ago, you noted that there was in fact a little uptick in March in VC funding when you gave us a little preview. Are you seeing that also for April? Are you seeing that uptick continue as you had forecasted, saying that you believed that starting, somewhere in the middle of this year, things will get a little bit better?
Yeah, so in March we saw some capital went up a bit. It was really driven by some of the larger deals that happened. April it declined again. So we're still, when I say decline, we've been under $1 billion in capital invested for about the last 6 months now. And so we haven't seen it reach over $1 billion. For some context, in late 2021, early 2022, you were seeing about $3 to $4 billion invested into the crypto space every single month. And we haven't seen it cross the $1 billion mark in about 6 months now. So it's still pretty low. And like we said, I think that's going to continue for a little bit further as investors get more comfortable, start understanding what's being built out there. They'll probably get more comfortable making investments. And we've talked about this in the past. There's a lot of crypto dry powder out there. So investors have raised capital in their crypto investment funds over the last 2 years, billions of dollars. We're talking about over $25 billion, and that will have to be deployed and invested over the next few years. And so I think just in this moment right now, investors are not ready to really make those investments yet.
Now, your report also talks about emerging opportunities. One of those noted is zero-knowledge proofs, or ZKPs. For those who don't exactly know what that is, can you explain what ZKPs are and what are some of the strong use cases outlined in the report?
Yeah, so zero-knowledge proofs it is very complex. And so a simple way to explain it, it's the ability to show that some information is true without revealing that information. So I'll give you an example. If you go to a store to buy alcohol, you have to prove that you're over the age of 21. But now you would have to show someone your ID, so you're giving them your name, your full home address, your driver's license number, even your birth date. They don't really need to know that. They just need to know whether you're 21 or not. What zero knowledge proof does is extract away all of that, and it uses complex computational intensive calculations to determine whether you can prove a statement is true without having to show any details. So that's at a high level what ZKPs are. Zero knowledge as a field of study has been around for decades. What we've seen though with the adoption of blockchain and crypto is that they're taking ZKPs and applying it to this space. And the two primary use cases we're seeing using ZKP is the ability to scale blockchains and the ability to make for private blockchains. So those are like the really two core use cases.
Now, another emerging opportunity in your report is Web3 identity, which you write can enhance security. Specifically, you write that Web3 identity can deliver numerous advantages to users by putting them in control of their identity data and enabling them to better manage their information. Can you elaborate on that?
Yeah, so at a very high level, Web3 identity is letting users control their own data. Because today in the Web 2 space, you have your information stored in so many different databases by so many different Web 2 companies, and you don't know how they're using it. You don't even know, sometimes they get hacked and you don't know who has your information. What we see the Web 3 identity opportunity is to be able to take all that information and you as the user get to control it, and it's stored with you in your own custodial wallet. That way, if you interact with application, they can ask for your identity and you can only provide the information that they need, but they do not store that information on their servers. And so that at a high level is the way we see it.
You also just released your analyst note on one of the biggest crypto conferences, Consensus 2023. Yeah. It was released this week. We spoke on the ground on day one of that conference, and immediately you told me that right off the bat you noticed that attendance was lower this year compared to last year. You were there both years. Yeah. Sure enough, you were right. Organizers tell me there were 15,000 in attendance this year compared to 20,000 last year. You also made an astute point that there were less traditional finance institutions on the ground there this year compared to last year. Now, you expand on all that in your analyst note, and specifically you write that crypto is marching on despite the bear market and regulatory uncertainty. In your note, you also make a point of pointing out that regulation and policy were front and center at Consensus. So what else stood out to you at Consensus, especially as the days progressed, given we spoke on day one?
Yeah.
So what else did you notice as the conference progressed into day 2 and then into day 3?
We held a lot of conversations with founders and investors out there, and I think overall the sentiment is still very positive, and so I think that's good. A lot of people as in developers are still coming into the space, building applications and trying to find use cases for Ethereum or use cases for different blockchains to build out real world applications. So I think overall, the sentiment was still very positive, which is a good thing. And also talking to investors too, and just like we said in the report, investors are still looking for opportunities and looking for areas to invest, and they're out there looking for opportunities as well. And so overall, I think the sentiment was still pretty positive.
Lei discusses the new crypto report and his analyst note on Consensus 2023 in lots of detail. So you can check out that full interview over on our website at cnbc.com/cryptoworld. That's all for Crypto World this week, but we'll be back again on Monday, and we'll see you then.